Welcome to The Explainer. Look, as a professional trader, I've spent thousands, and I mean literally thousands of hours staring at charts, digesting economic reports, backtesting strategies, the whole shebang. But today, we're going to confront a really hard truth together. We're going to shatter the illusion that simply having better market analysis automatically equals better trading results, because it doesn't. So we're going to pull back the curtain on the actual, literal driver of consistent profits. We're talking about trading psychology.
Okay, let's dive into this, because this is the massive elephant in the room, isn't it? I mean, you know how to identify an uptrend, you know exactly what a head and shoulders pattern looks like, or how to spot bullish divergence. So why are you still losing money? Why is there such a frustrating, painful gap between your market knowledge, this unlimited potential to make money, and what actually ends up hitting your bottom line at the end of the month?
Well, to understand why we get so stuck, we kind of have to trace how Wall Street itself has evolved. Back in the late 1970s, fundamental analysis was basically the only game in town. The old guard thought technical analysis reading price action was just absolute mystical hocus pocus. Then, by the 1980s, the tide started to turn. The shift to technicals really took off, and today, practically everyone uses charts. But here's the thing. The truly cutting-edge traders out there are realizing we're in the middle of a third shift, mental analysis. You see, we've mastered the math, and we've mastered the price patterns, but we absolutely haven't mastered our own minds.
So let's talk about why that very first phase, pure fundamental analysis, ultimately failed so many independent traders. It created what we call a reality gap. See, mathematical models, they're perfectly logical. They weigh interest rates, balance sheets, supply and demand, and they tell us exactly what the price should be. The problem? The actual human beings trading the markets and moving the volume usually don't have the slightest concept of those models. They are acting on emotion. And when clean, clinical logic collides with messy human emotion, logic usually loses.
That reality gap is exactly why the whole industry shifted over to technical analysis. As traders, we collectively realize, hey, people repeat the exact same emotional behaviors over and over again. Technical analysis is brilliant because it takes all that chaotic, collective emotional behavior and organizes it into identifiable, repeating patterns. It keeps you hyper-focused on what the market is doing right now, turning the market into this endless stream of opportunities. It's a fantastically powerful tool, which is exactly why you spent so much time and energy trying to master it.
But here is where we hit a massive brick wall. Just because you have the tools to spot an opportunity doesn't mean you have the right mind to execute it. The author makes this incredible comparison. The average trader is like the Earth, and the consistent winner is like the Moon. I love this. They exist in the same solar system, they look at the same markets, but they operate in fundamentally different psychological environments. Down here on Earth, the average trader sees the money flowing. It feels like it's right there in their grasp, but they live in a constant state of fear and emotional pain. Meanwhile, the consistent winner up on the Moon, they've broken through. They operate effortlessly.
Now, what's really interesting about this is that if consistent trading was just about being incredibly smart or working super hard, you'd expect society's absolute brightest minds to just dominate the markets, right? But they don't. In fact, the largest group of consistent losers is made up of doctors, lawyers, engineers, scientists, and CEOs. It turns out, being able to perform literal brain surgery or run a Fortune 500 company does not stop you from completely panic selling at the bottom of a trend. Raw intelligence and great analytical skills just aren't the defining factors here.
So, if it's not a sky-high IQ, and it's not some top-secret chart indicator you haven't discovered yet, what on earth is it? The winning edge is a totally unique mindset. Consistent winners simply think differently. They have developed a highly specific set of attitudes that allows them to stay disciplined, focused, and incredibly confident, even when the market is throwing absolute chaos at them. They've essentially rendered themselves immune to the everyday fears that completely paralyze the rest of the trading community. And those everyday fears, they are unbelievably costly. I want this number to just burn into your memory. 95%. Let that sink in. 95% of the trading errors you are likely making right now, the exact errors causing your hard-earned capital to literally evaporate before your eyes, they don't stem from a faulty trading system. They stem entirely from your own attitudes. They come from your own internal fears.
We can actually break this down. Those errors are driven by 4 primary trading fears. The fear of being wrong, the fear of losing money, the fear of missing out, good old FOMO, and the fear of leaving money on the table. When you operate out of fear, your focus naturally narrows. It's a survival instinct. You literally block out rational, objective market data. You either freeze like a deer in headlights or you panic and run. You could have the most perfect, beautiful, technical setup in the world in front of you, but if even one of these 4 fears is active in your mind, I guarantee you will sabotage the trade.
Which brings us to a really harsh truth we have to face. Look, every single one of us watching this probably thinks of ourselves as a risk taker. I mean, we're traders. But let me ask you, do you really accept the risks just because you physically click the buy or sell button? The logical side of your brain says, well, yeah, trading is risky. I am currently trading, therefore I am a risk taker. But there is a massive, gaping psychological chasm between just assuming you're taking a risk and truly embracing a non-guaranteed outcome.
So, the crucial point is understanding this difference. Taking a risk is just clicking a button, crossing your fingers, hoping you win, and feeling completely sick to your stomach when the market ticks against you. If you feel emotional discomfort, anxiety, or fear while you're in a trade, you haven't actually accepted the risk. Actually, scratch that. You're fighting the risk. Truly accepting the risk, the way those consistent winners on the moon do, means you can put on a trade and take a loss without the slightest bit of hesitation, internal conflict, or emotional pain.
To get to that elite state of true risk acceptance, you have to fundamentally rewrite how you view the market. Listen to me. The market is entirely neutral. It's like a river. It doesn't know who you are. It doesn't care about your account balance or your mortgage or how bad your last trade was. It just moves, generating perfectly neutral information about itself. It quite literally does not possess the power to cause you emotional pain. Any pain you feel is strictly the result of your own faulty attitudes and perspectives distorting that neutral data.
Let's walk through exactly how this plays out in real life. We call it the cascade of fear-based errors. You know the drill. First, because you haven't accepted the risk, the market starts moving against you. But instead of just cutting the loss like a robot, you start rationalizing. Oh, it'll bounce at this next support level. Then, because you took a bigger loss than you should have, you hesitate on your very next valid entry. Then, out of pure frustration from missing that move, you jump the gun and force a setup that isn't even there. And finally, you're just sitting there hoping and praying the market will magically save you. None of these errors come from the market. Every single one of them comes from you. And this brilliantly illustrates the biggest, most dangerous trap in the entire trading world. I call it the black hole of analysis. When traders experience the pain of those cascading errors, their immediate knee-jerk reaction is, I clearly need to learn more about the market to prevent this from ever happening again. So you dive into new indicators, new moving average crossovers, totally new methodologies. But here's the secret. You can never learn enough to eliminate the risk of the market proving you wrong. Trying to learn your way out of psychological pain is just a one-way ticket to ultimate frustration.
Because the hard, cold reality of this game is that absolutely every single trade has an uncertain outcome. Always. As long as you are trying to out-analyze the market just to avoid the pain of uncertainty, you are going to feel disappointed and betrayed. It's going to feel like you just can't trust the markets. But the painful truth? You simply can't trust yourself yet. True confidence doesn't come from a magic indicator. It comes from training your mind to override your natural human inclination to avoid pain, so you can finally act in your own best interest with zero hesitation.
Achieving this consistency requires an absolute paradigm shift. This quote hits the nail right on the head. The successful trader you desperately want to become doesn't just need a new charting package. You literally have to grow into a completely new version of yourself. Developing a real trader's mindset means being willing to abandon almost everything you currently believe about risk and the nature of trading. It's no longer about looking outward at the charts. It's about looking inward. So let me leave you with this ultimate question. You spent years analyzing the market, right? You know the patterns inside and out, you understand the math, but the missing link to the exact consistency you're chasing, it's standing right there in the mirror. Are you finally ready to step away from the screens for a minute, stop trying to predict the totally unpredictable, and start doing the heavy lifting of analyzing your own mind? Because that, my fellow traders, is the only true road to lasting success. Thanks so much for joining me on this explainer, and I'll see you on the next one.